Hello, everyone. I am here with Patrick Barkwell, who has 2 decades of experience in the insurance and financial planning industry, is an advisor and a chartered life underwriter, and also a vice president at People Corporation. It's a pleasure to chat with you today, Patrick. And I have to say, I've always enjoyed our conversations, especially in an area that I will be honest. I don't know much about. I'm a chiropractor, and our members are chiropractors. Sometimes this world of insurance can be very daunting. So
Absolutely.
that's your
And
expertise. That's why you're
and
here.
that's why People Corporation is at the table and very excited about the partnership with the Canadian Chiropractors Association. We have the licensing, we have the bench strength, we have the expertise to make sure that we demystify what is inherently quite complicated and help your members understand, create legibility, and make informed decisions.
That's fantastic. And we're so happy to partner with you as well. I've had nothing but great experiences with People Corporation. So thank you so much for that. I will tell you that in my own journey, when I first started, there was, you start and people are like, you should get insurance. And you go, what am I insuring? I don't have anything. I've just
For
started.
sure.
I'm
Yeah.
not making much
Yeah.
money. What do you say to someone like in their early stages of a career? Should someone be thinking about life insurance and disability, like all these different insurances, or should we not bother until we're a bit older and making more money?
Well, the first thing that you need to understand when you enter into that framework is that you purchase insurance with two items. One is, yes, monetary, and there's a budgetary consideration. And of course, we need to take that into focus and bring that into the equation and have that consideration. The second, however, that is often overlooked is health. And
Mm.
so you need to come to the table with a um, healthy, clean, no friction application in order to get standard insurance, whether that be life insurance, health and dental, disability, or critical illness. In this day and age, our doctors are getting better at asking questions, better at finding, looking at family history, pulling genetic probabilities on what might be
Mm.
coming down the road for you. And so the amount of concerns that we're seeing in applications or flagged considerations is increasing. And it's becoming more difficult to bring that clean, healthy slate to the table and obtain insurance without having an exclusion, a higher premium. Now, lastly, if you're young and you're early in your career, you can also lock in rates for the remainder of your career. So you can buy insurance today that's a fraction of the long term cost that deferring that decision will inevitably end up looking like.
Wow. So if I'm healthy right now, I'm in my most chiropractors when they graduate 24, right? 24,
Sure.
25, still healthy, clean bill of health. Now is the time to go and get all this insurance taken care of so that you're locking in at this early rate. Um,
I particularly would highlight that if you're just graduating, you really want to look at disability insurance.
right.
There's a lifetime discount on that product if you apply in the first 18 months of graduation. Strike while the iron's hot, take advantage of those discounts. That ship will sail at month 19, and that opportunity is that door is closed.
Yeah, sometimes. So, what about this medical requirement, right? Like, you hear people saying, "Oh, well, like for me, for example, I broke my ankle." So, I was really glad I had disability insurance when I was in practice many years ago. I broke my ankle just falling down the stairs, so I was glad with disability insurance. What if someone has had an incident like that? Are they not going to get insurance? A lot of people are confused about medical requirement and pre-existing conditions. Can you expand a little bit in that area?
Absolutely. And, I'll talk to all insurances, but specific to your case, the incidence of disability claims are 7 illness to 1 injury. And
Mm,
so when individuals think or hear the word disability, they're often thinking about the broken ankle. What is more challenging and will truly take you out of the workforce is a permanent disability that looks like eye loss, uh, bone and tissue disorders, the big
Mm,
three: heart attack, stroke, and cancer. And it is said that if every Canadian were to live and have critical illness, for example, from birth till their passing, that 1 in 3 would claim on that product. So the statistics of claim are higher than you believe.
mm,
Now, if you go down the road and you do have something that's happened, an illness, I personally am asthmatic, as an example,
mm.
and I was from an early age, and you come for underwriting, there's optionality. So you have the ability to exclude certain things and cover everything else and take a standard premium. You have the ability to take an adjusted premium and account for a pre-existing condition and pay a bit of a surcharge for that. That's called a rating in our world. But moreover, what's very interesting for your population is the fact that we are not asking health questions until the 28th of February for individual health and dental plans.
So, Patrick, does that mean our members before February 28th can get insurance without answering any of these questions? Like, that's huge if you can do that, right?
Massive. Yeah,
That's
we have many layers of protection we can offer your members. And if
Mhm.
we're talking about that 24-year-old, we actually have policies that we can offer today that they will never answer a health question for, that they can retain until age 99. It is
So,
unheard of and
yeah.
a massive opportunity.
So the key is before February 28th, they have to, and this is for the health and the individual health plans, right? So your health
Yes,
and dental benefits. So you can get these benefits without having to answer any of these medical questionnaires.
truly, it is a 20-minute exercise, and you've
Wow.
just taken that risk off the table for the remainder of your lifetime. The other thing that's very nice about these policies, when you're young, you're often not going to have a feel for what does my actual outflow look like in terms of
Mm,
dental expenditures, medical expenditures over the course of my career. But I often counsel our younger members that a monthly budgeted known amount is a lot easier to plan around than the shocking $1,500
yeah.
bill that
That
comes up out
suddenly
of
comes
nowhere
up.
and is going to be
Yeah.
recurring. Yeah,
Yeah,
yeah.
absolutely. Can you just speak a little bit about, chiropractors that are in group practices? Um, they can still have their individual plan, but as a clinic owner, you can also get a plan for the people that are working in your practice, correct?
Correct.
Yeah.
So currently we have two options and solutions for that specific scenario. The nice thing, if you are a clinic owner or a manager or integral member of your practice, to understand about our solution is that instead of the 10, 20, 30, 50 members or 3 members that are a part of your organization coming to the table negotiating something, you're a part of many thousands of people. What you are
Okay.
going to see as you move forward is stability to future rates. And
Mm,
that is often something that's unknown when you're in the market for a company benefit plan. What does this look like over the next 5 years is a function of what your employees are using, which you don't know. And it can be unsustainable to have an expensive benefit plan that is renewing at percentage points much higher than your payroll. So you're forced to make some tough decisions down the road in a
hmm.
situation where there's no need. You know your employees need this because their utilization, they're using the plan, but the
Right.
premiums are going up and becoming unaffordable. That's a rock and a hard place if I've ever seen
That's,
one.
yeah, absolutely. So, no medical questionnaires until February 28th. That's really important because you can get this coverage even if you have some issues. And whether you're in a group practice or not, you can tailor these plans to whatever works for you. They just have to contact People Corporation and you will help them out.
Yes. Now, the last thing to be aware of, if you're in this contingent and these are interesting data points for yourself, we are able to set a level premium so that your premium is not age banded. You don't have increases as time goes on.
Right.
And you can have extreme confidence in the stability of that cost for the duration of your career, retirement, and late stages of life.
Um, so that's for early career. Let's move to mid-career. Someone who's been at the game for a bit, they're in practice, the money's finally coming in. Why, is a lot of our members are self-employed. I just want to be sure that self-employed chiropractors can also access these plans.
Absolutely, and it's one of the best fits. If you're self-employed, you're either filing as a sole proprietor and or
Right.
you have a corporation. Managing the corporate cash flows is another job on top of your personal job. So once again, a budgeted monthly known amount can be very helpful. Not only that, but having a tax deductible premium to the sole proprietorship or corporation is a lot more efficient mathematics than the utilization of the medical expense tax credit in Canada. That is
Mm.
somewhat of an antiquated instrument. It is a lot easier to work with a deduction that comes right off the top of your income tax return. And that is perhaps a complicated thing in wording, but our advisors are happy, willing, able, and competent to help you measure those outcomes. Take a look at even your existing outflows of dental and medical expenses through the year, optimize things so that you have an immediate win and insulate you against unknown large expenses that may be coming in the future.
So can you just, as you said, this is not our area of expertise, it's yours. If I
Sure.
have a healthcare spending account, you're saying that I can get a tax benefit through my corporation. Did I understand that correctly?
Yeah, so the healthcare spending account within a corporation is deductible against the active income or annual income of
Hmm.
that corporation, right? If an individual instead is paying for this dental bill, that massage, this prescription drug out of pocket personally, then they have to spend up to a watermark, a $3,000 number personally before they even start to qualify for any tax benefits. Then they receive a federal and provincial layer. Federally, it's 15%. And so, easy math federally, if you spend 4 grand personally, you get $150 back from the tax man. You've
Mm,
also had to pay tax, a layer of tax to transfer that $4,000 to yourself and create income.
that's
Very
right.
inefficient. We're talking about thousands of dollars of differences here that are left on the table. And that is a optimization strategy that if you're in this boat, you really need to contact us and review.
Yeah, that's a great point. And I wish I had known that because I didn't. It did, I didn't realize that I could get that help. So, I'll be honest, when I was self-employed and running my practice, I didn't have any insurance. So, to your point, when I went to the dentist or when I went for, the things that aren't covered in our wonderful publicly funded system, I paid out of pocket and then add family to that, right? Now then you get
Oh, yeah.
your kids and
Mhm.
your spouse. And if you don't have benefits through an employer, when you're self-employed, you are the employer. It can get really expensive. And if someone had told me, look, you can pay for these plans and it'll give you a tax deduction, it would have saved me a lot of money. But that's spilt milk now, Patrick. That time has gone for me. So I'm mid-career, I'm in my practice. Why should I start thinking about things like retirement now as it relates to insurance and my health and dental plans? Isn't it
Well,
too
I'm
early,
gonna.
even mid-career? I got a long way to go before I retire.
Well, first, there's three things that you should be thinking about if you're in the middle stages of your career. One is the statistics around health, and the fact that we need to start being realistic about the likelihood that your healthcare expenses are going to increase, not decrease, over the coming decades. And Today you might be healthy, so you can come to the table and you can get insurance to cover all those future possibilities without any exclusions and without significant premium outlay. So you want to be pragmatic and responsible and suggest that a small amount today is truly insurance so that if there are large bills coming down the pipe for you tomorrow, that you have defense, you have a monthly budgeted amount, and you're not dealing with shocking large bills coming forward. The next piece, when we talk about retirement, you have to really consider that you're going to earn a certain amount of money in your career. You're going to manage to save a certain percentage of that cash flow. You're going to invest, and those investments are going to hit a final value. Your last day of work, that's it. There's no more contributions. Maybe some of us are entitled to an inheritance, or you get lucky, or there's some real estate you can sell. There's opportunities for liquidity in retirement, but generally speaking, there's a known quantity of investments. But what's happening right now? People are living longer. The advent
Hmm.
of AI and AI integrating with medicine is meaning that medical advancement is happening at a more rapid velocity than ever before at any time in history. So we're living longer, treatments are getting more expensive, and the cost of drugs is a known problem that our federal government is talking about.
Hmm.
So you're going to have a finite budget with an increasing line item that is your healthcare costs and your health. You need to start planning around mitigation there so that you don't have to take away from your lifestyle in order to pay for your fundamental health.
Yeah. Yeah, and certainly, you hear those horror stories, right? Like, I had this whole plan and then boom, I got hit with a terrible illness or I couldn't work or, there's so many things that can happen and that's why I think, I have a critical illness policy as well because you never know what could happen. You can have a heart attack, cancer, all those things, but then also making sure that your family's protected too, right? Like if you have children or dependents and something happens to you, what happens to them then as well? So all of this connects,
For certain, you don't want to be put in a position where you're making a choice between health and finances.
right?
I think that I've always encouraged my clients to consider that insurance alleviates the risk that you're going to have money stress and health stress in the same day.
Yeah,
So you can
abs
take that scare off the table, right? And more positively, let's say, and optimistically, we're talking about a healthy population here that works on their feet, that understands the body, that is thinking, I'm going to fight the good fight, and I'm going to have a healthy retirement, and do all of my activities long term. One of the nice features about the policies that we can put in place today is that you'll have travel coverage into retirement and you'll be able to go on trips,
Oh,
go to other
nice.
countries, do all the things, and you don't have to answer questions every year or deal with pre existing condition exclusions or be worried about. Paying thousands of dollars for that trip to Europe or the Caribbean or to go see the Incan Trail to make sure that if something does happen, you get the helicopter that gets you off the side of the mountain into the hospital and on the
Do you
jet
have
home.
a bucket list, Patrick? I feel like those things that you just listed, you're like, these are my bucket list when I retire. That's fantastic. No, absolutely. And travel, everyone loves to travel, but you never know, when you're out there if something happens. So tell me if I already have an existing plan. Should a member just go, oh, forget it. I don't need to look into this, or can People Corporation still help them review what they've already got and make suggestions?
Yeah, it's a great question. So, the first comment I'd make is that it's quite often the case in my experience that if you do have a plan, you might know certain elements of it. And the odd time I get someone that knows it like the back of their hand, but these plans are long and there's a lot of language in there, and it might not be your area of expertise. So, if nothing else, chatting with one of our advisors will open up the best way to use your plan keep you to be an informed user of your existing plan. We can also just simply operate as a second set of eyes. And so if we
Mm.
have a lower cost product, a more robust product, better contract language, we'll make you aware of those opportunities. So once again, you can drive informed decisions.
Yeah, and it's so important to do that because, as I said, as I think about my own journey and the stages I've been through, there was so much that, and until today, I don't understand and I don't know. And so sometimes you get these plans, they've been in place for a while, and you even
Yeah.
forget what did you sign up for? Or like what happened with me with my disability insurance, I got it and I forgot it. And then never even looked at increasing my coverage. But because when I got it, I wasn't making any money. But then I forgot. Then I break my ankle. Now I'm making a lot more money, but I never increased my coverage as my income
Right.
increased and my expenses increased. I didn't even think about, oh, I should maybe review it. So it was only when the accident happened and suddenly I was making a claim and they went, yeah, but you're only insured, like you only did this much. You could have topped it up. We were sending you notices, which I went, I don't know what this is, and
Yeah. Well, it's
threw it
it's
out.
often another language. It's also
Yeah.
to give you credit. You get a letter in the mail once a year. That letter didn't come with personalized advice or analysis. It's very easy, first and foremost, to have never seen it because you get a stack this big,
Yeah.
and half of it is junk. Or not understand the ramifications or implications. Maybe you put it on your desk and it collects dust for a while, and then the
Yeah.
window comes and goes. There's a
Yes.
multitude of reasons, and our firm has national scale. It has a very deep talent bench. Our commitment to you, if you entertain a product such as that, a disability insurance, is that we are on the phone with you at those intervals. We are explaining and analyzing your options, and we're looking to do what's best for you.
Yeah, that's fantastic because I think if I had that back then, it would have been, I would have been able to make decisions because I'll be honest, when I did have that disability, while I had the coverage in place and it absolutely helped me, it certainly wasn't what I would have wanted to get when I wasn't able to practice for close to I was off work almost I believe it was like almost 6 months. It was quite an ankle injury and I needed two surgeries. So, again, out of the blue, one Sunday afternoon fell down the stairs. So it's so important that you continue to re-look at things as your career shifts and your priorities change. And that's when having an advisor like you to call and say, here's where my life's at now. When I spoke to you 5 years ago, I didn't have any children. Now I do. Or when I spoke to you before, I didn't have two clinics. Now I do. I only had one, and just touching base. Would you recommend that someone touches base every time there's that change in their life?
Life events, at minimum, a triannual review of your risk mitigation strategy. So all insurances should be happening. And it's not just that maybe perhaps you need more or you need different insurance. As your success grows and you're a diligent saver and you're paying off your mortgage, the inverse can also be true, and you might need less coverage. And so we
Oh.
can help to ensure that there's a reduced premium load that's going out of pocket for your household monthly.
So
But
things
I
can
will.
go the other way, Patrick? Like you can
Oh
actually get
yes,
less?
yes. It's
Okay,
not the
that's
never-ending
interesting.
increase. Yeah,
Okay.
yeah.
What
So
can you give
so
me an example? How would it go less? I'm putting you on the
yeah, sure.
spot now. How would it
Life
go less?
insurance,
Okay.
for sure. Okay, so life
Right.
insurance in the beginning, you're insuring. I might pass away and leave my spouse with 20 years of two young children without income, so I need income replacement. Our mortgage is at an all-time high because we just bought the family home, the forever home. That's going to
Mhm.
be paid down. Well, if you fast forward 10 years, you've reduced your mortgage principal by 20%. There's only 10 more years of income replacement on the table. You don't need the
Mhm.
many millions of insurance that you did at that most vulnerable time in
Right.
your life stage. Um, an alternative to look at as well is on the disability side in your case. So, um, disability contracts generally pay you until age 65.
Yeah.
And so you typically, because the average duration of disability in Canada is 2.7 years, so you typically entertain a contract that offers you that continuum until age 65. Well, if we
Mm,
fast forward and you're now 59 years of age and you've established the majority of your savings, and you still can't afford to take 2.5 years off and lose $250,000 of earnings,
mhm.
right? That's a wet bite out of your accumulation strategy that might significantly hamper retirement outcome. But perhaps only 2 years of disability benefit would be right sized for you. And so you can do a policy change, reduce some premium, obtain some savings, increase your ability and lifestyle in retirement by doing so, by reallocating those dollars. And that's something that our advisor group, again, is consistently looking at on behalf of our clients.
That's fantastic. See, I didn't even think of that. You see, you just highlighted that, wow, it can go the other way. Yeah, I won't lie. I always thought it went up, Patrick, because as you get
Yeah.
older, thought it, it goes up. No, but that's such a great example. Thank you so much. So, one last bit of wisdom from you. If you wanted our members to know one thing, what would it be about this area?
Yeah. So, okay, I'm going to say two. Okay. So,
Okay.
first, the name of the game when it comes to insurance is you buy it when it's inexpensive, you lock in rates when you can, and you make sure that your major risks are mitigated. So if you're going to have any health costs in the future, they should be optimized in terms of how the cash flows are outlaid, and also take the big risks off the table. A 30-year-old on disability for life has 35 years without earnings. That's millions of dollars. Not many people can afford that outcome. So get it while you can, lock in the rates while they're cheap, and make sure that things are right sized for your scenario. Okay. The second thing that I would say is wisdom is that this universe is complicated and there's a lot of jargon that you might be unfamiliar with. There's a lot of contract features and languages that you might be unfamiliar with. It's increasingly important today that you just set up a quick call with one of our advisors prior to this February 28th deadline, where you don't have the risk of health questions or a deep dive into your background that might preclude you from getting some of the solutions that we have in place, and just let them understand the complex contract language and these long benefit booklets on your behalf, and be the expert to give you a second set of eyes and reassurance that everything is tight, it's locked down, and you are in the right position.
That's fantastic. And I just want to reiterate that February 28th deadline date for our members. Please, please reach out to People Corporation, get everything looked into. And as Patrick said, hey, your rates could even go down. That's fantastic. Depending on where you're at in your career. But Patrick, thank you so much for this conversation. Really appreciate
You're
it.
very
And
welcome.
I know the advisors that you have already helped many of our members get the plans that will hopefully protect them into the future. So I appreciate your time and thanks for joining us.
Absolutely. Thank you for having me. And we look forward to continuing to be partnered with the Canadian Chiropractors Association. We value each and every one of you. And Happy New Year and best of luck
Yes.
in 2026.
Great. Thank you so much.
You're welcome. Bye for now.